Welcome all. I am Mike, aka Veteran Crypto, and this is the Node Network, where we give you the news, interviews, and education that you need to survive in these markets. Sorry, a little bit behind. I'm spinning a bunch of plates right now. But I appreciate you tuning in. Let's pop over here real quick. I appreciate you tuning in, and we're going to jump on into it. So today we have a couple of really good deep dives that we've put together for you. One on Nexo and one on Flare. Because on yesterday's show, I owned some Flare a while back, and I knew a little bit about it, but I didn't know a ton. And so I wanted to make sure that we did it justice and did a deep dive on it. And then we're also going to talk about Nexo. Something else that we're going to talk about today is it looks like that Binance is cleaning house. They're eliminating some projects, some tokens off their platform that don't meet their compliance standards. And then also going to touch on a little bit, not going to take a whole lot of the show because we kind of talked a lot about XRP yesterday. But I do want to touch on a couple of things. And one is showing, a lot of people want to bag on us trying to say that we're just, spreading FUD. But one of the major, individuals that hype, XRP and Ripple all the time got kind of caught. And I don't want to, I don't want to paint it in too much of a way because he's confirmed that he's coming on next week, and I want him to come on and talk with us. I don't want to scare him away, but we all need to be held accountable for our words, just like I hold myself accountable. If I say something wrong that's factually incorrect about a project, I'll be the first one to correct myself, or if someone corrects me, I'll acknowledge it. So this isn't an attack. This is something.
No. You know what? So I watched the clip just now, and I mean, hey. There's no problem with everyone makes mistakes sometimes. And I think what Mr. Claver did here is, look, he's just trying to, like he's got an opinion just like we all do, So I'm really looking forward to having him on the show. I think it's going to be a great discussion.
But we need to be careful how we phrase things. And I'm not saying that I'm not guilty of this either. But I just want to point out that, a lot of these people listen to them and just take everything they say as gospel. This is why it's important that you cite sources. A lot of people don't like that. But if you're going to make a statement of fact, you need to cite your source, and this is why. So we're going to play this, and then we're going to move on. I promise.
Awesome.
A bunch of information came out about Canton and Japanese bond market, DTCC, and Korean bond market. They also include atomic cross-border settlement. Impact to XRP. I think they're using XRP to settle on the back end of Canton. Canton is a governance network.
Jake, according to the official Canton
So Mike,
network,
can you pause it for just a second?
Settlement.
Who is the lady here? Who is she?
This is, I believe it's Crypto Eerie. She used to be a huge XRP maxi, if I remember right.
She puts out great content on X, dude.
Yes, but she is very logical, very factual, and that's what she's doing. Is she's citing her sources right here and showing that he made a statement, and she's like, actually, this is why.
But Mike, how cool is it that she's able to evolve as the facts evolve?
Yes,
I like that.
It's because she's logical. She's not emotional. But let's check out what she has to say.
Of transactions occurs directly on the Canton network itself. Users pay fees in Canton coin, specifically when they use the network's public infrastructure to settle transactions. And the tokenomics are designed so that the demand of the Canton coin rises as the institutions build, transact, and settle on Canton.
Let me see if I can find that, Mike. I see what Joseph is saying in the chat.
Exchanges that are going to be tokenizing on Ondo or Securitize or other infrastructure?
If I had to summarize really the features of Canton is that all applications are sovereign, interoperable. You can compose smart contracts to one another, meaning I can do real DVP on the network. And the third one is very important, and that's really where L2s came into the play, is what we call horizontal network scalability. So if you think of Ethereum or the likes of Ethereum, they wanted to have all assets exist on one network. And from a computational and physical perspective, from our point of view, that just doesn't scale. And we've seen multiple issues when applications who were very popular at a time were able to kind of clog the network. So just imagine that we're going to do collateral management on Ethereum, and suddenly a JPEG application becomes very popular, and now I can no longer deliver my collateral on time because people want to to buy JPEGs.
And in order for all of that to settle on one, I mean, you've even heard Larry Fink say this. He said it at Davos this year. He said that there will be one blockchain that everything settles back to, and that would also have significant risk. Because
one chain to rule
one
them all.
Infrastructure that everything relies on. Obviously, there's additional risk there. But he's like, there's really no other way to do it. We have to have one unified ledger that everything settles back to, so that there's interoperability and everybody has the same record set. That is the XRPL. So I don't worry about that stuff. For me, that's just more good news as they build out additional infrastructure to be able to tokenize different types of assets. It's all got to settle back through XRP.
Let me throw a number at you. We process $4 quadrillion of settlement a year.
Wow.
Okay, that's 4 plus 16 zeros. There is no blockchain on the planet today that can handle that.
I think you should listen to other people. I don't think I should be the only person you come, listen to. I think you should do what I do, which is I go out to the market. I find other people that are domain experts in whatever their area is. Oftentimes they will have blinders, and I could have blinders too. Right, I realize that, but I look across those.
All right. So, what were you saying, David?
I don't remember. That was just so enlightening, that post right there. I feel like I'm just filled with information now. I need to go out into the world and scream it from a rooftop. Apparently, everything's going to settle back on the XRPL, Mike. Wow. I guess we need to be buying XRP. Yeah, I don't see how that can happen, especially when it looks like all of these large institutions are actually building on Canton Network. Look, maybe there's something going on behind the scenes at the private company Ripple Labs that they haven't made everyone aware of. But, if there is, I would love to know about it. What I see that's public right now is that Canton Network settles a ton of transaction volume and XRP Ledger does not.
The thing is with interoperability, it doesn't all need to settle on one ledger. That's the whole point of interoperability, is that, that if somebody owns an RWA, a digital asset, with interoperability, it's recorded across all the different networks. So
Mike, here's another thing with that along those same lines. I'm not convinced how well many of these institutions and people who work at these institutions actually understand this stuff. I don't think they really do, based on some of the statements that they make. It looks to me like if I'm building an EVM chain dApp and I want it to settle on Canton Network, it looks like with Zenith, it'll be able to do that atomically. So I don't see the problem there, It looks like Solana dApps also.
I don't understand a lot about this technology, and I don't pretend to. I mean, I have, the aspects that I'm very knowledgeable about, that I'm very sure of myself, but there's a lot of stuff that I make it a point that I don't comment on. Like when, you and some of these really smart people like Scott are talking, I'll just sit back and I'm in the chat and I'm doing other things because I'm like, half the stuff you're talking about, I don't even understand. So, I know my lane. And I think it's important that, that more people do that. If you're knowledgeable about something, share that knowledge. But if you're not, have the integrity to be like, what? I don't know. Let me go find out.
That is such a good point. Such a good point, Mike. Look, the first thing I'll say if I don't know something is, hey, you know what? I'm not sure about that, but why don't we find out together? Because with all these AI tools now, we can hop out there in a second and find out whatever piece of information it is that we need to find out. So, there's no reason. Yeah, there's no reason to bullshit, man. It just makes you look like stupid.
Exactly. So no, it's like in the military, if you go before a board or something and, it has all the sergeant majors and, the officers sitting there and they're asking you questions and stuff. That's, basically what you're taught to say is if they ask you a question you don't know, it's like, sergeant major, I do not know the answer to the question at this time, but I will go find after this, I will go find that information and I will get back to you. And you actually do it. You actually go find the information and come back and find that sergeant major and say, sergeant major, I told you I would find this information. I found it. Here it is. And that's what, that's what the people need to do is if you don't know something, it's okay. Fucking nobody knows everything.
No.
It's okay to not know, but it means that it gives you an opportunity to learn, to go out and find that information. And that's half the fun that I have in crypto is finding and learning about this, technology as it evolves.
Me too. I really do enjoy this stuff, Mike. And that's why when we run through the deep dive research, at the Node.pro in our Intel library, dude, that stuff is so valuable. I'm taking a look at it right now, and I'm looking forward to learning a little bit about Flare. Because, as we were talking about XRP Ledger a little bit today, I always see
yesterday.
Flare. Yeah. I always see Flare mentioned, almost hand in glove with the XRP Ledger. And, I was taking a look at some of the Flare native dApps yesterday. And, they didn't look horrible, to be completely honest with you. They looked like, kind of like Cardano dApps a little bit, like a little bit of liquidity there. That didn't look horrible. But we'll see. I'm interested to learn more about it.
But I mean, it plays into exactly what we were just talking about is, yesterday we were, kind of going deep on XRP and Flare came up, somebody in the chat. And it was obvious. We didn't know about it. I knew a little bit about it because I got airdropped some, a couple of years ago because I had XRP and, and I was earning some yield on it. And so, I knew that it brought like smart contracts to chains that don't natively have smart contracts, that kind of thing. But that's about it. And I hadn't looked into it for, probably a year or two now. So, but we were just like, you know what? We're not going to comment on it. We'll just do a deep dive on it tomorrow. And we'll all learn together, like David says. So
exactly,
that's what we're gonna do. Yeah, that's what we're going to do today. So
I'm looking forward to that.
Absolutely. So let's get into this. So today's news, I guess Binance is cleaning house. So it says Binance, the world's largest cryptocurrency exchange by trading volume, is actively purging its platform of tokens that no longer meet its stringent listing standards. The focus is on ensuring high liquidity, network security, active development, and regulatory compliance. The most critical upcoming date is August 17th, which is in 6 days, when several tokens will be completely removed from spot trading. So full spot trading delisting, these are the tokens. So Binance will halt all spot trading pairs for 6 specific altcoins on August 17th at 0300 UTC. All open trading orders in these pairs will be automatically canceled. Affected tokens: ACX, Across Protocol, Hashflow, HFT, Hotel Foxtrot Tango, PIVX, PIVX, Vulcan Forged, PYR, VANRY.
I remember that one. I remember Vulcan Forged. That's the only one I know so far.
I've heard of that one. VANRY. VANRY is the ticker. Victon or Viction is VIC. So the impact on holders. Users must sell or withdraw these assets before the trading halt to avoid holding illiquid tokens on the platform. Following delisting, withdrawals may only be supported for a limited time before potentially being converted into stable coins through conversion, though conversion is not guaranteed. So if you own any of these assets, get them, sell them, get them off into a wallet if you're still bullish on them, whatever it is you want to do, but get them off Binance before the 17th.
Yeah, so Mike, I was up until recently on my shopping list for this October. I had some exchange coins on there. I had BNB on there. I had Hype on there. I had Lighter on there. Those are the 3. And I was thinking about adding GMX, actually, because GMX is, I think, one of the only legit, actual decentralized exchanges out there that doesn't have regulatory risk. I don't see GMX, suddenly complying with some Clarity Act, to be completely honest with you. So I had those 4 on my shopping list: BNB, Hype, Lighter, and GMX. I removed them all. Because, I just don't think that those business models are solid enough. I mean, you know what we might do, Mike, is rather than doing deep dive research, because we've already run deep dive research on BNB, it might be an interesting idea to run it on Binance, like the centralized entity, Binance, because they lost access to the European market. They can't or don't want to comply with MiCA. They weren't able to get a license to do that. And I'm just curious, they don't exactly report, right? Do we have earnings reports for Binance? I don't think so.
They aren't a publicly traded stock or anything, are they?
No, it's not like Coinbase.
Well, then I don't think they'd be required to then.
I don't think so. But I would like to see if we could get some type of a window into Binance. It's a Chinese entity, right? So if we could run some research on that, I think that would be extremely interesting. I am not a fan of Binance because it seems to me that, just about every big crash over the last couple of years, you can kind of sort of trace it back, it looks like, to, one of the market makers over at Binance. And look, they seem to be great traders. They certainly have the capital to be able to move markets. But is that good for the space? I don't think so. And then when you take a look, Mike, at all of the different coins that have launched on Binance over the last, call it 5 years, dude, like 95% of them have been down only, so.
Well, and we've talked about it multiple times. I mean, there's some really, really questionable and very focused issues, like during October 10th. Those of you that were in crypto, back last October, when we had that huge crash, and you saw projects like Atom, Cosmos, that the only place that a lot of these tokens basically went to zero, for like in a flash crash and recovered, was on the Binance platform. And they have the deepest liquidity in a lot of these. So I just see way too, and then even FTX. I mean, even though FTX was a total scam, and Sam Bankman-Fried and his cohorts were using depositors' funds to basically party it up and invest in Anthropic and all that other stuff. Even CZ, he's the one that kind of queued all that off. By dumping the FTX token, and it kind of cascaded into Sol a little bit, because my understanding is that FTX had like a large holding in Sol, and so it kind of some cross contamination happened there. And I actually bought on that. I think I bought some Sol at like $20 or something like that, and then it recovered, and I made a quick 3x or something like that.
I got to say, that guy, Scam Bankman-Fried, dude, he was one of the best, like, seed early stage investors ever. If he had not been, stealing his clients' money to make those investments and had been able to hold them, he would have performed extremely well. The problem was that he was stealing from all of his clients, man. And then he put up that FTT token basically as collateral. So it was, and then he had that chick over at his hedge fund, Alameda, who said that she doesn't believe in stops. It's like, okay.
Oh no, dude! That interview where they're like, they were talking about stop losses and stuff, and she's like, "What's a stop loss?"
What is stop loss? What is that? She had like, God mode on Alameda Finance until it blew up in her face, and yeah, man, just a horrible, horrible outcome for so many people. So many people got screwed by that, and Scam Bankman-Fried is exactly where he deserves to be, man. So, yeah, we can't see any more of that. And that's part of the reason why, dude, like, I really dislike Binance. Because even though, like, they provide a service to a lot of people, like, I just don't see Binance as, a positive actor in the space, because so many problems seem to stem directly from Binance in Web3 and crypto. So, yeah, man, it's just not a good look. When you look back at October 10th, it seems to me like there was a direct attack on Binance's margining system that succeeded. And, whoever did that had some great insider knowledge of how that margining system was likely to fail. So I don't know exactly what happened there, but everything's on chain. So anyone who wants to take a look at it certainly can. Speaking
Absolutely.
of on chain stuff, Mike, did you see that the project that shall not be named information that I posted the other day?
I didn't. I might have, but
it was last night.
You have to be more specific. We posted a lot of stuff.
I kind of it's KTA.
Okay.
The information that I posted about I sent to you about KTA. What did you think about that? We need to be able to verify that, right?
Oh yeah, no. I actually I think I messaged you back and it was like, hey, do we have anywhere where we can verify this? Because if it's true, definitely not good. But again, big if. So I mean, have we been able to verify? Because I don't even want to mention it or show it unless because it's
salacious.
It's very salacious,
scandalous.
Like I said, I don't even want to show it because unless we can verify it, because that would be FUD if if we can't cite a source.
Okay, yeah, no, I agree with you. So I've got the post pulled up, and I'm going to go ahead and see if I can take a look into this, because there are some trends. Look, this stuff is on chain, man. There are some transactions on the base chain that look, at first glance to be suspicious. So I think that it might be suspicious. It might be worthwhile.
Don't be suspicious.
Yeah. So if anyone wants to take a deeper dive into this, the account on X is White Pirate Love. Okay. So this account has a couple thousand followers, joined in September 2024. And, definitely worth taking a look into. But until we're able to verify the information there, can't really opine, not live on the call anyway. So, yeah, because those Kita people can be, they're aggressive. I'll put it that way.
They're interesting. Interesting. We'll just say that. But Joe, welcome from the UK. Welcome to the show. Yeah, I sold my over 40,000 XRP, brother. And if you want, actually, I right after this show, I meant to do it yesterday, but I'm working on a second business. I was over at a property, doing some remodeling on a cabin that we're opening a lodge. So I was working on that, but I need to post that content on that deep dive on XRP that we did. And if you watch that, and feel free to fact check it, but if you watch that, you'll understand why I sold my XRP.
Yeah, I think that, there's a big difference between the fintech, Ripple Labs, and XRP, the coin, and it's whatever its use case is in the XRP ledger. So it's really, look, make up your own mind. Don't allow me or anything that I say or Mike says to, it doesn't, you can't let what we say influence you at all. It's just information. You got to go out there and you got to, do your own research on this stuff. But what I would say is understand what is Ripple Labs, what is the XRP ledger, and what is XRP the coin, and how does XRP the coin fit into the XRP ledger. So just understand those three things, and that will really, really help. So,
and the big thing for me was understanding that there is absolutely no reason, and that's what the content will show you. There's absolutely no reason for a high value XRP. There just really isn't.
I think actually, Mike, it's the opposite. I think that there's a better case for a low value XRP.
Well, no, there and that can be debated, I guess. It can't. But it really, what it boils down to, without getting too deep in the weeds again, I'll post it on our website, the node.pro. I'll show it real quick here, because there's a lot of really good content over here. So, if it'll be posted here. So if you go to the node.pro and then go to the Intel library, this is where we post, and this is all free. shilling anything here. If you want to learn about crypto, if you want to learn about hot and cold wallets, advanced DeFi strategies, all that kind of stuff, David has been kind enough. He built all of this. He's been kind enough. It's all structured with tests and quizzes and videos, and you can listen to it in a podcast style while you're working or driving. But this is all free of charge. No gimmicks. You don't got to put in a card, nothing like that. If you want to join the community, we don't do Discord or anything like that because of all the scammers that are in there. So we moved all of our social over here. And again, all free. And then the Intel library is all the deep dives. But I will post that content that we played yesterday, and I will put it up in featured after the live show today for you to take a look at it. But basically what it does is it lines out all of the reasons and cites the sources of why I understand and I firmly believe that there is no need for a high-value XRP. It's a very cheap gas token. And even when used as a bridge asset, it's reusable. So if it's used to move $1 billion, regardless of what the value of the token is, after the 3 to 5 seconds, that it's used as the bridge asset, during the transaction, then it goes back to where it can be reused again. It's not like, when it's used as a bridge asset, it's burned. It's just used and then recycled. And the gas is so cheap. We've done the math and showed it, here on the show multiple times. It's 0.00001, per transaction.
Hey, Mike, can we bring the chat? Can we bring the chat up onto the stage so that everyone can see the chat as it's running? Awesome. Thank you.
Absolutely. So, yeah, I mean, I don't want to, get it into the weeds talking about XRP again.
Thank you. Yeah, we've done plenty of that. What else is going on in the news, though? I've got some interesting items if you're, curious.
I have a couple things, and then let's bounce it over to you.
Great.
So I got margin and loan service removal. So ahead of the spot delisting, Binance is removing specific assets from its margin and loan services. So the affected tokens, BitTorrent, BTTC, and Network, ticker POWR. So borrowing for these assets is suspended as of today, August 10th, which was yesterday. Full delisting from cross and isolated margin services will occur on August 14th, so in 3 days. Second service impact. The delisting process affects the entire Binance ecosystem, not just spot trading. Binance Futures stopped accepting new trades involving the 6 main assets on August 7th. Copy trading. Effective pairs were removed on August 10th, yesterday. Simple earn. Positions will be redeemed automatically, moving assets back to users' spot wallets during the delisting process. So the official sources, if you want them, and I can post these, but it's all from Binance. That's
so, Mike, anyone who was using those coins or tokens as collateral was taking their lives in their own hands, man. I mean, my goodness, you're talking about using. I'm sure all of those assets that were mentioned there are very illiquid, number one, and likely with extremely high levels of volatility. So I don't see why anyone would want to use those coins as collateral unless you're trying to run some type of maybe funding rate ARB on Binance with that coin as collateral. Let's say that you put up that POWR coin and then get short POWR on Binance. As long as the funding rate is positive, you could make some money there. But man, that is likely to blow up in your face. So, I think that if you're going to use collateral outside of a stable coin on one of these exchanges, you've got to make sure that it's a high quality piece of collateral. Even something like ETH, man, like using ETH as collateral, that's still super risky. Because if your collateral is down, over the course of a week by 10 or 15 or even 20%, that's a problem, man. So, you got to be very, very careful using collateral that's not a stable coin. And if you're using stablecoin collateral, you got to make sure that you use high quality stables. Not all stables are created equal. As we saw on October 10th on Binance, when USDE depegged to 65 cents on the dollar. Now, it was only on Binance where it depegged, and that was part of why I think that was an
why
attack.
it's so concerning.
Right.
That's why me and David, keep pointing out, we're not fans of Binance because there's a lot of things that happen that are unique to Binance, and I'm not a fan of it.
Nah, me neither.
But yeah, go ahead and if you have some news, let's go ahead and go over it. While you do that, I'm actually going to post that XRP material because I'm reading the chat, and Joe and Moneymaker, and I don't know how Moneymaker still
I know,
doesn't
dude. Did you see what
understand.
Moneymaker said? He said that Elon Musk is one of the earliest investors in XRP, bro. Does he say that just to mess with us?
I don't know. Maybe he is, but the thing is Moneymaker has been listening to us long enough, and I love that he
it's
comes
all
back.
good, dude. Yeah,
he's got to know by now, why. I don't know. Anyway, yeah, if you want to share some stuff, I'm gonna post that XRP material for Joe.
So I've got just one item that I want to talk about here. It's about what NVIDIA has done, just over the last couple of days. So NVIDIA has convinced some of the biggest private credit firms on earth, basically, to bet $500 billion on them and this AI trade. So this is such a massive sum of money. And, I read an article last night that I sent to you also, Mike. And let's see, it's basically all about how this circular financing loop looks very, very similar to, what happened I know, right? Say XRP 3 times and he shall appear.
Fucking Joe fucking magically appears.
Oh my goodness, man. But yeah, dude, the AI capex, all of this whole AI trade, like we've seen this movie before. And there was a really great post that I actually reposted over on X on my DeFi Uni account. Dude, it's kind of scary, actually. So, in the 1870s, the railroad build out and bust. In 2008, of course, the housing market and bust. In the 1980s, the savings and loan crisis. In 2020, the pandemic. But in 2000, what we saw in 2000 with the capex in 2000. So there are three instances here. Really just two that we want to focus on. The first two is the 1870s railroad boom, and the second one is the 2000 boom and bust. Those two instances are starting to look more and more similar to what's happening right now with AI. And the big problem for me, Mike, is Anthropic and OpenAI, because these two businesses don't make any money. In fact, they are massive loss-making businesses. And yet, if you take a look at the earnings statements for the hyperscalers, think Microsoft, Amazon, Google, and what's the last one? It's Meta. Those four, if you take a look at their earnings statements, they're basically saying that like the vast majority of their cloud earnings come from OpenAI and Anthropic. And yet those two companies don't make any money, man. They're massive loss-making businesses. And so there's a huge bet that, these hyperscalers are making on building out these AI data centers. And dude, it looks terrifying, because for me, here's the reason why it's terrifying. I live, sleep, eat, and breathe AI and crypto. I literally use AI tools every single day, such that whenever there's an update, like, dude, I'm using it within the first 30 minutes or an hour after there's some type of a new model.
Dude, I'm like right now, I'm using Chat GPT, and it's like a whole suite. I've built out a website, a full like just in the past day or two. Like what used to take me weeks or months, I built out a whole interactive website, for the adventure guide company that I'm starting with my brother and my nephew. I did a full back end CRM. Just basically built out the whole thing. I've designed like the cabin, the lodge. I've designed the whole thing inside and out. Had it to where it did all the engineering and all the different stuff. I mean, just we built out business models. We built out, basically a roadmap and milestones of what we need to accomplish in what order, what licenses we need to get. Just basically a whole business plan. And it was like a day or two to build it all out. And now all I do is, as I do things, if I run into any issues, I just say, hey, I'm working on this right now. What is it that, this is the issues I'm having. What is it that I need to do to, get the right paperwork? What's the right paperwork I need to get to the zoning department or whatever.
Sure.
And it would be like, you need to do this, you need to go here, you need to, here's the form, here's the links, go ahead and fill these out. And I can pre-fill them if you want. And dude, it's like having a freaking badass personal assistant.
So check it out though, Mike. Here's the problem, man. So I don't use any OpenAI products. I'm anti OpenAI. I think that it's I think that Sam Altman is some horrible person. And when I take a look at Anthropic, I don't use Anthropic products either. You know why? Because those tokens are ridiculously expensive. And here's the big problem for OpenAI and Anthropic. Up until just recently, the models from OpenAI and Anthropic were, they call them frontier, like leading the entire world. That's no longer true, man. Like, you can run Chinese models at a tiny fraction of the cost of the American models. And the Chinese models now are just as good, if not better. And so that's a big problem because the Chinese models are open weight. And so what open weight means is that if you want to, you can run those things locally on your own hardware, which means one time you buy a piece of hardware, maybe one of these NVIDIA GDX Spark devices, it sits on your desktop, and then you can run these open weight models without ever having to pay for a token ever again. So number one, you're seeing all of these different businesses, American businesses, they're not using American models anymore. It's like 60 or 70% of American businesses are now using Chinese models because the tokens are so much cheaper and these Chinese models are just as good. And so what does that mean for OpenAI and Anthropic, the businesses, if their models are no longer the very best in the world? And yet they've got these massive spending commitments of like $1 trillion each or more. And yet all they do is generate losses. And now they're seeing their very businesses getting eaten by Chinese labs. It's like, okay, that's a huge problem for the hyperscalers. And the moment that people wake up to that, the market will suddenly start repricing these hyperscalers overnight. And then, that's a big problem, man. So, it looks to me like
we keep telling you, man, we're not shitting on projects. We're not shitting on things. We are stating facts. Facts are not FUD. Stating a fact.
What's he's talking about? He's talking about some Fugazi. He's talking. What are you talking, man?
It's stating a fact and citing the source that shows that it's a fact is not shitting on a project. We are here to educate. We are not here to FUD, and we are not here to hype. We're here to give you facts and data. What you do with that is up to you. If we present a bunch of facts that show that XRP doesn't need to be a high valuation and you choose to buy it, it's your money, dude. Do what you want.
Yeah, man. Look, I wish you the best, dude. I want you to succeed. But when you present information that seems dubious, we're going to say so. So just go ahead and prove it, man. All you got to do is drop some links in the chat. We'll take a look at them right now live, and then you can be vindicated, man. And that's it. And I will happily eat my words, dude, gladly. Yeah. But all you got to do is prove it. Prove it. That's all. Easy. But about the AI trade, Mike, dude, I'm actually really concerned about this AI trade because, and I think what would be super valuable for us is to run deep dive research on the railroad build out in the 1870s and the 2000.com build out, the capex there, because it seems like there are, history doesn't always repeat, but it certainly does rhyme, right? It seems like there are massive similarities between those two capex expansions and what's going on right now with AI. Dude, like I use this stuff every day, and there is no reason in the world to use American models any longer, man, because the Chinese models are just as good and they're basically free. Like the tokens are so cheap and they're open source and open weight, and the American models are closed. So, and OpenAI and Anthropic generate massive losses, and Anthropic is about to go public, man, about to go public, and it's going to go public. This is a massive loss-making business with huge spending commitments. How in the world is it going to be able to meet those spending commitments? I have no idea. So that's a problem. That's a huge problem, because when you take a look at the earnings statements for Google, Microsoft, Amazon, and Meta, they're booking massive earnings from OpenAI and Anthropic. And like, dude, I don't think that that's going to continue. I don't think it's going to be sustainable. I think that both of those businesses, OpenAI and Anthropic, I think they're more likely to go bankrupt than anything else. So yeah, man, it's actually quite scary. I think it's scary, dude, because I was a kid in 2000 when the dot-com bubble blew up and burst. And now I'm not a kid any longer, bro. I'm a grown-ass man, and I'm smart enough to be able to understand this stuff. And so I'm just thinking to myself, like, oh man, what do I want to own? Well, I want to own spot Bitcoin, and I want to own physical gold. That's what I want to own, because spot Bitcoin can't be taken from you. You can't censor a private key. And physical gold also, that is a real hard asset that can't be stolen from you. You know what I mean? Like, it's not like some institution somewhere can suddenly freeze your physical gold that you hold in your safe, right? So, those are the two assets that I want to own, man. So because when this AI trade blows up, and it looks to me, Mike, like it's not a if, it's more of a when this AI trade blows up, like, dude, the Fed is going to have no choice but to step in and do the big print. That's what Larry Lepard has been saying. And, a lot of these guys have been saying the same thing, that there's going to be some big print operation. And when that happens, the only things that are going to perform well are going to be hard assets, spot Bitcoin, physical gold. So that's what I want to own, man, is those two things. And
so Joe, I just posted it. This is what we showed yesterday. Why XRP doesn't need to have a high value. So feel free to look it over. If you find something that you feel isn't factual and you can find information contrary, please, genuinely, please share it with us. We've told Moneymaker, I don't know how many times to, because he keeps calling us,
he's got to present some information, bro.
We've asked him multiple times, and all he does is throw insults. So,
I know. It's like, dude, just give us a link. We'll literally look at it right now live, dude. Like live on the show.
Yeah, Joe seems like he's more level-headed. So take a look at it. If you find something that's factually incorrect, please, by all means, shoot me a message on X, and I'm more than happy to look it over. So.
Yeah, look, I just want to be presented with some information so that we can read through it and make up our own minds. But if you want to just hurl insults, that's okay. I don't think it exactly bodes well for you.
No, it's just, anytime anybody, throws insults, and I've said this before, I just laugh, because basically it means that they've lost the argument. If somebody is giving facts, or even something they think is a fact, and you're not able to refute it, and it's inside a source, and all you do is throw insults, basically what you're saying is I can't prove you wrong, so I'm going to attack you personally.
Yeah. Whenever someone calls you a duty face because they don't like what you're saying. Oh man. Yeah, dude. What else is going on in news though, Mike?
So let's take a look real quick. Let's see. Unfortunately, on X, because of all of the talking I do, and with the XRP army, my feed is flooded with XRP stuff. Let me take a look at.
Yeah,
Sorry,
so there's actually some interesting news about the yen and interest rates in Japan.
You know what? Dude, we got 15 minutes before the deep dives. Why don't you dive into some charts? I know people like to see, like your analysis.
Oh, for sure. For sure. Let's go ahead and do that, Mike. That'll be quite muy interesante. Let's go ahead and bring up some charts here. And I'm just going to go ahead and share my screen, and we're going to take a look at a couple of interesting items. I want to share this here. There we go. Okay, so just want to make sure, Mike, that you can see my screen here, and that everyone on the call can also see the screen. Just want to make sure. Perfect. Okay, so this is BTC. And I think that I would just want to start off here with BTC just real quick. I think that we're getting very, very close to the end of the Bitcoin bear market. But notice this level of trendline resistance. We're basically sitting at trendline resistance now and getting rejected from it. If I go ahead and zoom in just a little way so that we can all see this a little bit more clearly, check this out, you guys. So basically came up here to trendline resistance back in the middle of May, had a big dump, and we're getting rejected at trendline resistance again. So the confirmation is 62K. Bitcoin gets below 62K and it's bombs away to the downside. The first level of support would come in at 57.9. That would be the first level of real support for Bitcoin. But if that doesn't hold, then I think that Bitcoin likely moves down towards the bottom of this falling wedge pattern, maybe down around the low 50s, maybe something like 51.5, 51,000 for BTC. That looks like decent support. So I think that we're getting very, very close to the end of the bear market, but we're not quite there. It's August 11th. And the bear market, I think, is likely going to end on Monday, October 5th, literally to the day, calling it to the day. That's simply based on the Bitcoin prophecy. Okay, so I believe in the Bitcoin prophecy. I call it the prophecy. Most people call it the Bitcoin 4-year cycle. I think it's more of a prophecy at this point. So I'm thinking, hey, you know what? The end of the bear is Monday, October 5th. Bitcoin bear market trough is put in by that date. And that means that we likely have another 7 or so weeks of downside out of BTC. So that's what I'm positioned for. If we take a look at Ethereum here real quick, Ethereum is getting rejected actually below its 200-day moving average. And I think that this one likely has a sharp sell-off at some point over the next 7 weeks. If we take a look at Canton has resistance much further up above. So, Canton was down by nearly 50% over the last couple of months here. And trading well below its 200-day moving average. Canton is still highly inflationary, even with everything being built on it. Look, I'm bullish, CC. I'm bullish on the Canton network, but I don't own any of it because I'm waiting to see more. And also here's another reason why I don't own it yet. It's hard to custody CC in a hardware wallet. There's only one hardware wallet that you can do that with, and I'm not buying that particular hardware wallet. So if I can't self-custody in a hardware wallet, it's hard for me to own it. But I really like what Canton Network is building, and I plan to initiate a position at some point in the future. Let's take a look let me go ahead and just scroll down here. For everyone who's interested in XRP, let's just take a look at that real quick. XRP actually broke down during the session today. So if we just take a look at this, let me zoom out so that you all can see this. So here's the pattern, XRP, the last bull and all of this bear market action here. All-time high for XRP, $3, and let's call it $3.60 or so, $3.66. But let me zoom in to the more recent price action. Number one, XRP has been trading well below its 200-day moving average, basically since November of last year. So that's bearish. And now it's trading extremely, well below its 200-day moving average and breaking down below this level of horizontal support. So the trend is your friend, and the trend for XRP is down and to the right. So where is there solid support for XRP now that it's started to break down even further.
Please don't say zero. Again, people,
no. I
money
won't.
makers going to have a come apart.
No. I'm not going to say zero. But let's just run some basic technical analysis here for XRP. Let me go ahead and zoom out here to a weekly, okay, so that we have a little bit more data. I'm going to grab a trend line tool and I'm going to anchor it to the March 2020 lows. And then I'm going to extend to the right. I'm going to go ahead and delete this horizontal. Now we have support below. That support is down at, 55 cents or so. Now, there are levels of support that will likely hold before XRP gets down there, if it gets down there. Let me go ahead and grab a horizontal, and we're going to throw down this horizontal there. So 75 cents is likely a level of support for XRP on the downside. And if that does not hold, then 55 cents would be the next level of support. So you could also say that 94 cents is a level of support. So I want to go ahead and throw that down there. So that would likely be the first level of support. I think that that's weaker, though, because whenever you see a sharp move up with a wick like this, there's very little trading activity, which means that that level would likely not be significant support. But when you see much more trading activity, like all of this here, that is a much more solid level of support. So I think 75 cents is the next level for XRP. And, that's what, 25% to the downside from here? That's about in line with what I expected to do. That's probably going to be pretty close to the bear market trough, unless there's some type of unforeseen crisis out there. So why don't we go ahead and take a look at some Japanese stuff, because that's been hot in the news recently. USD JPY. So, the Japanese bond market is like the ultimate Fugazi. And this thing, USD JPY, it's going to be very, very expensive for the Japanese and for the US Treasury to defend this exchange rate. And with yields blowing out in Japan, if we take a look at the Japanese 30-year, this pattern up here, if we just zoom out, this is a weekly. So let me just go ahead and make sure that this trend line is drawn in properly, like so. And then this pattern up top here, that's a triangle. That is you could call it a diamond. Some people might call it a pennant. Some people might call this a triangle. This is a pause formation before continued upside. At least that's what it looks like to me. So, and it's trading well above this 200-week moving average. So what happens if the Japanese 30-year rips above 4.218% to put in fresh all-time highs? Well, what would happen is the delta, or the spread, between the Japanese 30-year and the U.S. Treasury, the 30-year bond, as that compresses and gets smaller, it makes less and less sense for anyone still running a yen-dollar carry trade to hold those yen. Like, you've got to repay that yen borrow as that delta shrinks. So that's a big problem, because it would mean that either
there's
Japanese...
a lot of problem in the U.S. is trying to step in, because, and I don't know if you covered this, but Japan, they're a huge holder of U.S. treasuries, and so the U.S. is trying to help them out. But it's going to be interesting to see how this plays out.
Yeah. It looks to me like it's going to play out with higher interest rates. So, the Japanese 30-year basically sitting within a couple of points of all-time highs. The U.S. 30-year sitting at 5.235% as of today. And so it's very interesting to me that, after the last FOMC, which was, what was it, like 2 weeks ago or something? After that last FOMC, all we saw was yields rip higher. And so what that tells me is policy error. So we got to go ahead, Mike, and take a look at FedWatch. And I just want to make sure that everyone can see this. There we go, FedWatch. The next FOMC meeting is in 36 days. And so let's go ahead and take a look down here. Look at that, a 50% probability of a hike. Now, I don't think the Fed is going to hike, simply because, I don't know, man. I just don't see that being likely. I think that it's more likely that we see something more akin to a sharp pullback in equities, which just completely removes the probability of the Fed hiking rates. So, if we're taking a look here at the S&P, this has been up only since COVID, just straight up, basically, even with, the 2022 little bear market there. Like, it's basically been up only for the last, 15 years? I mean, and the acceleration in up only since COVID has just been remarkable. But if we take a look and we zoom in here, this is a weekly. Let's go ahead and zoom into a daily on the S&P. And we're starting to print what looks like a flag. So this, if everyone can see this, this is the pole, and we're starting to print a flag. So, hey, or paint a flag. If this confirms, then you would see the S&P break out maybe to 8,000. So it starts to look to me like the S&P could continue to rip. Now, if the S&P keeps ripping alongside yields on the 10-year, well, then maybe the Fed will hike in September. That absolutely could happen, because yields on the 10-year, man, like you could see yields on the 10-year up here at 5%. That would mean yields on the 30-year, likely around 6%. So this is not good. This is really not good for the real estate market, because it makes your buying power much, much smaller if you've got to pay a much higher interest rate to borrow. Now, let's take a look at crude a little bit. Crude oil found support at that 200-day moving average. And there's this gap fill that I've marked on the chart, Mike, at $89. So if crude continues to rip, watch $89 to be the level. And you know what? Crude, especially when crude oil volatility is high, and we can measure that by taking a look at, I think it's OVX. Yep, crude oil volatility index. Now, this has paired a lot of its gains. Now, remember, volatility is a mean reverting asset class. So whenever you see vol expand, you should expect it to contract. It's mean reverting. But that mean can change. And so this 200-day moving average is basically the mean for oil vol. It is materially higher than it was back in February. Okay, so that Iran conflict, that has expanded crude oil's vol. And as we see, tank bottoms starting to get hit for that SPR and around the world, a lot of developed countries are starting to run out of their own supply, and we're going into the winter. So into the winter, you're going to need energy so that people can make it through the winter. And so I think that what we might start to see is a refilling of the SPR, a refilling, especially in Europe and Southeast Asia, of their supplies into the winter. So that means that we likely see oil vol rip again. Now, let's take a look at gold and silver.
Really quick. So Lord Berg, you're asking before you digest the XRP report, do we expect banks to have their own stable coins? They already do. OUSD is a stable coin that I think is Bank of America, JP Morgan, and a bunch of other ones are developed together. And so banks are already developing their own stable coins.
Yeah, I think that they're more akin to CBDCs in disguise than anything else, Mike. I mean, with all of the regulations going on for USDC, for USDT, for OUSD, for PYUSD, I mean, all of these payment stablecoins that are regulated now by the Genius Act and will soon to be regulated by the Clarity Act, like these are CBDCs. I don't think there's any other way to put it. So there are stablecoin products that are completely decentralized, but there are very few of them, and they're much less liquid. One of my favorite actually is BOLD, BOLD, which is the liquidity product, which is basically minted against ETH. Kind of interesting stablecoin architecture there. But if we bring it on back here to the charts, here's gold. Gold has ripped all the way back up to its 200-day moving average. Now, if gold is able to break out above $4,500, then, hey, we could see the next leg up in gold, which is crazy, because if we zoom out here to a monthly on gold, there is no precedent for gold to put in a parabola, correct, and then put in another parabola. So what does that tell you about the dollar, which is the denominator for gold? It tells you, and this is a monthly chart, you guys, it tells you that the denominator is likely going to get whacked. So here's DXY. This is the US dollar. And let's just zoom in from a monthly to a weekly so that we can just see a little bit, more granular data here. Notice where this trend line dates back to, all the way back here to 2011. This is long-term trend line support. Now, this pattern, if we zoom in on it here, this is, you could, I guess, kind of, sort of call this maybe like an inverse head and shoulders pattern, kind of. But if this trend line breaks down and we see the dollar back here at 98.55, well, then that would be a failure of the inverse head and shoulders pattern. Now, why would this inverse head and shoulders pattern actually confirm and complete? Well, because interest rates are pushing sharply higher. So as yields on the 10-year Treasury note push higher, and on the 30-year bond, as they push higher, you should expect the dollar to rip to the upside. If the dollar breaks down as Treasury yields push higher, that would be bad news. You know what it would be good news for, though? Gold and silver bulls. Gold and silver would likely rip to the upside. Take a look at silver real quick. Here's silver. It found support at the level where we expected it to find support, around $54. If we zoom into a daily, you can see that double top. So let's just check out that double top, because that was resistance and it flipped on the breakout and became support. So I just want everyone to understand this. This is really foundational to understanding TA. All you got to be able to do to understand technical analysis is be able to draw support, resistance, and understand trend. So check this out. We had resistance there in October of 2025 at around $54. Resistance again at around $54. That's a double top. When that double top was broken to the upside, the level became support. It flipped from resistance to support. There's the breakout. Now, let's go ahead and take a look at the price action today or recently. Notice where silver found support. It found support just above, this is horizontal support. So at $55, it found support, and now it's ripping back to the upside. Resistance would come in at the 200-day moving average at $70. So likely more upside ahead for silver. Another $5 up to trend line, or this is a moving average resistance up here at $70. I think that silver could run again, but check it out though. Silver does not have a precedent for running again after putting in a parabola. So if we zoom out here on silver, this is a monthly. Every time, and there have been a couple of instances here dating back to the 1970s where we've seen silver run and put in a parabola. And each time the parabola started to come back down, there was maybe a relief rally or two, but not a second parabola to the upside. So you've got to ask yourself, are we seeing silver, gold and silver start to rip and put in that next parabola? Or are we seeing a relief rally before further downside? Depends on what happens with the dollar, I think. And it depends on if there's real shenanigans in the US Treasury market. So if we take a look again here at rates, this is yield on the 10-year. Dude, if this rips to the upside and the dollar breaks down in the face of higher interest rates, then yeah, gold and silver put in another parabola. That would be bad news for anyone who's not holding hard assets. You got to hold hard assets. The ultimate hard asset, in my opinion, is Bitcoin and gold, physical gold. You got to hold physical gold, not some paper Fugazi version of gold. And you got to hold spot Bitcoin, not WBTC or Coinbase wrapped Bitcoin or any Bitcoin that you hold on a centralized exchange. That's not real Bitcoin. You need Bitcoin in self-custody in a hardware wallet, preferably using multi-sig, man. And that means you got to have 2 of 3 signing, and you got to distribute those keys amongst multiple vendors of hardware wallets. I like Ledger, kind of, sort of. My favorite is Trezor. And then you could take a look at, it's like one key. I kind of like the one key device. So those are the three that I would use. And then, maybe use Sparrow to set up your multi-sig for Bitcoin self-custody. But yeah, that's the way to do it, man. If you want to really own a hard asset, I think Bitcoin is the way to go, and physical gold. So Mike, you want to go ahead and take a look here at thenode.pro and dive into some of our deep dive research today. I think we've got Flare, right? We're going to take a look at Flare. I'm not talking about buying toilet paper at the supermarket here. If something is marked down 90%, it's not a bargain when it comes to digital assets or equities. If something's marked down 90%, that means there's a serious problem.
Well, so it means there's a serious lack of demand.
It likely means that the market is telling you that there's a real problem with that asset. So let's just find out by taking a look at the deep dive research. What is Flare? What's going on with Flare? So Mike, let me go ahead and play this and let me know if you can hear this.
No.
Okay, got it. Let me restart my screen share here so that we can all hear this together. I'm going to stop the screen share, restart this thing, and we're going to get started. Actually, you know what? I want to share. I'm going to share this one right here and share sound. There we go, Mike. Let me know if you can hear this now. I'm going to go ahead and make sure that I'm sharing the right thing. Not sharing the right thing. Shit, my bad.
Lord Berg, thank you. That very, very, very nice of you. Appreciate that.
Trophy Cake, thank you so much. All right, let me go ahead and just get this running.
When it says that, it's basically there was like a meme or something that goes next to it. So there's like a cake with a trophy, and so instead of showing the little picture, it will say trophy cake.
Cool, man. Trophy cake. Oh, I see what you're saying. Got it.
Yeah.
So let's see here. I want to make sure that I'm sharing the right. I don't want to share a Chrome tab. What I want to do is I want to share the Intel library over here and share audio. Perfect. There we go, Mike. If you want to bring that up to the stage. I got it. Perfect. And I think that this is going to work for us.
Smart contracts have a structural blind spot. To execute logic based on real-world data, they
Mike,
rely on third-party middleware known as Oracle.
You see how messed up that looks?
I don't know.
Let me stop that. Yeah, let me see if. Yeah, I know it looks kind of funky. Okay, how about that? That's a lot better. Here we go. Ready?
There. Yep.
Contracts have a structural blind spot. To execute logic based on real-world data, they rely on third-party middleware known as oracles. By doing this, a decentralized contract is forced to blindly trust an external security model. When that middleware fails, the contract fails. Flare Network bypasses this vulnerability by operating on a different axiom: enshrined data protocols. Instead of outsourcing data collection, Flare builds it directly into the base layer. This schematic compares the two approaches. On the left, a standard Ethereum virtual machine reaches out to an external Oracle network. On the right, Flare integrates data acquisition directly into its proof-of-stake consensus mechanism, eliminating the need for external trust assumptions. Independent validator nodes double as native data providers.
Okay, so one thing that I'll say before we continue is that there are validators to secure the network, and they do that by minting a ton of tokens and distributing them at the genesis. And although that works when things get started, if there is not significant volume on that network and very strong tokenomics, well, then at a certain point, the validators are no longer incentivized to keep their nodes running. And that means they turn them off and the network dies. We've seen that happen to a ton of chains so far just this year.
Well, and like I said, I got an airdrop of Flare for, back when I had, again, over 40,000 XRP. I got an airdrop of Flare because one of the first things that it covered was, like with its F assets was FXRP. And I put it Bifrost. I think it was Bifrost that I put it on, and I was earning like 16% or something like that. But it's basically they're minting new Flare and releasing it out to people. And then I moved it over to Uphold and was earning there for a while. And I just did not see where they were getting adoption. I didn't see where they were, and this is just, I mean, again, I'm not a subject matter expert on Flare. I wasn't seeing anything that was super interesting about it from the little bit that I looked into it. And I saw much more interesting projects that I wanted to put that liquidity into. So not saying that there's anything bad about Flare. We're still learning about it. I just didn't, I just saw better places for my liquidity. I'll leave it at that.
Yeah, let's learn a little bit more.
FIP.01 restructured this token distribution. Instead of rewarding passive holders, tokens were directed exclusively to active, liquid participants, establishing a user base geared for protocol usage rather than holding. The conclusion of this bootstrapping phase triggered a rigid architectural pivot. Throughout 2026, Flare was forced to transform its economic model from an inflationary distribution layer into a deflationary value-capturing engine. To understand Flare in 2026, you cannot evaluate the infrastructure in a vacuum. The security of the data feeds is now inextricably linked to the network's internal burning and redistribution mechanics. This architectural map displays the first layer of value generation, the Flare Time Series Oracle, or FTSO v2. The system utilizes a dual-layer data pipeline, pairing rapid block latency updates with secure 90-second anchor consensus feeds. This design processes over 1,000 asset pairs simultaneously, directly on-chain. To maintain strict decentralization, individual data provider weights are capped between 2.5% and 3.3%, ensuring no single entity can establish a stake oligopoly. The second layer is the Flare Data Connector. Independent attestation providers establish consensus on events occurring on external networks, like Bitcoin and the XRP ledger, as well as arbitrary Web2 APIs, allowing smart contracts to verify external state without relying on centralized bridges. The third pillar is the Assets Protocol, which upgraded to version 1.3 in mid-2026. This system brings non-smart contract assets into Flare's EVM environment as ERC20-compatible tokens, such as FXRP and FBTC, using an over-collateralized minting mechanism. Following the V1.3 deployment, institutional credit vaults on Morpho registered over $1 million in active borrowing against FXRP collateral, immediately generating cross-chain liquidity depth. The final technical pillar, deployed to mainnet in Q3 2026, is Flare Confidential Compute. This system utilizes trusted execution environments and protocol-managed wallets to grant smart contracts the ability to perform private computations and autonomously manage accounts on external blockchains. Deploying enshrined infrastructure at this scale requires rigorous academic and engineering expertise. The network was built by a fully doxed executive team, Hugo Fillion, Dr. Nairi Usher, and Sean Rowan, who share an extensive background in machine learning and quantum computing research from University College London.
Interesting.
These 4 enshrined protocols successfully generate cross-chain utility. But utility alone, without an economic sink to capture that value mathematically, leads to terminal token dilution. On April 24, 2026, governance overwhelmingly passed proposal FIP.16. This vote completely re-engineered the FLA token's economic mechanics to address that exact problem. This chart compares the tokenomic parameters before and after the FIP.16 upgrade. The protocol aggressively slashed baseline annual inflation in the burns from Oracle and cross-chain queries. The protocol also creates a strict division
Well, it looks like we might be having some technical difficulties. Can all of you see me? So I think we lost David. So I'm going to go ahead and you know what? Let's go over the chat a little bit and see if we can get David back. So yeah, I mean, I've been going back and forth with Moneymaker in the chat. Brother, I don't know what to tell you. I've posted links to articles that debunk your entire thesis that Elon Musk, that wallet belonged to Elon Musk. It doesn't. It just simply doesn't. And actually, here, I'll share it real quick. Not sure where David went. Hopefully we get him back to see the rest of that deep dive. There he is.
Yeah, so there's a bunch of guys outside the house. They've been burying power cables, and I think that it kind of messed up my stream there, Mike. So if you want to take over and share what's going on here, maybe we can continue. What do you have here?
Oh, I just while we were waiting for you, I've been going back and forth with Moneymaker as always in the chat, and just it's he makes claims and makes them as statements of fact, but again doesn't offer any cited sources. I keep giving him cited sources that prove him wrong, but for whatever reason he doesn't want to look. But he made a claim that there is an old wallet from 2013 where somebody bought or had 16 million XRP that was worth roughly $116,000 at the time. And he was claiming that it was Elon Musk's wallet. Anyone can make a wallet and name it whatever they want. I can name it, your mom if I want. But I mean, this is there's an actual Binance, Binance did this, and they said XRP scan shuts down Elon Musk XRP ownership claims. Not every account or wallet address that bears the name of a particular person, especially public figures like Elon Musk, actually belongs to said person. XRP scan explained this earlier to an XRP enthusiast. What if it's not Elon Musk? So basically, it just goes through, and anybody can name any wallet whatever they want. It just because it's named Musk does not mean it belonged to Elon Musk. He's publicly said he's bought in Doge, he's bought in ETH, and he's bought in Bitcoin. You can invest however you want, and you can speculate and make up stuff, and if that's how you want to invest, have at it. But me personally, I like facts and data.
So, Mike, I have GOAT. It's very good GOAT. Musk
very
like
good
GOAT.
You want to buy GOAT? Yeah, buy GOAT.
Oh man. So you want to get back into the
yes,
the
please.
deep dive?
Yeah, let's get back in the deep dive. Maybe rewind it a bit so that we can, that part. I apologize to the audience. I thought it was me that was getting choppy. I'm on Starlink, so I thought it was me getting choppy, not David. So I was just sitting here staring at you, frozen. And
no. It's just because of the construction outside.
The network now operates on a rigid mathematical floor where standard Layer 1 usage inherently tightens circulating supply. The apex component of this 2026 restructuring is the Flare Income Reinvestment Entity, or FIRE, which functions as a protocol-owned treasury. This flow diagram maps the network's revenue pipelines. First, FIRE distributes accrued real-world assets and stablecoins to P-chain stakers, incentivizing long-term network security without native token inflation. This completely closes the loop. Data utility generates protocol revenue. That revenue buys back the supply, and then funds the stakers who secure the very data feeds the network relies on. Despite this highly optimized architecture, Flare faces distinct systemic risks as it expands, starting with the immediate economic danger of the FIP.16 transition. If organic data query and bridging volumes fail to scale fast enough to offset the 40% cut in programmatic inflation, validator profit margins will compress. This creates a risk of node consolidation, which directly threatens the network's decentralization.
Yeah, and it threatens the network's very existence. We see this over and over and over again. There's so many networks that have used, some variation of this same model where they mint a bunch of tokens when the chain starts, distribute that to validators for the most part, and then those inflationary incentives run out, and they're forced to rely exclusively on actual transaction volume on that chain or network. If the transaction volume isn't there, then eventually the chain dies. So, yeah, man, this doesn't look good.
This diagram outlines a trusted execution environment enclave, highlighting potential vectors for side channel or enclave extraction exploits.
So you see, here's the thing, Moneymaker XRP. We don't have to disprove your claims. You have to prove them. Someone has to disprove what you're saying, man.
I'm just doing you a favor because you're not citing any sources, and I know there's other people in the chat, and I want them to benefit from the dialogue that we're having. And since you're not citing sources, I'm going and fact checking your stuff. It's just like how we present and cite our sources in all of our deep dives. This deep dive and all the deep dives we do, we have the source document. And the source document has all the hyperlinks to where we get the information for our deep dives. And that allows people to go and verify that what we're saying is factual. If you've ever been to college, it's required on all papers that you write in college. And that's why, is so that you are.
I don't think that's true anymore, Mike. College seems to be.
Yeah, it might not be. But when I went to college, that's what you had to do, is you had to cite your sources, because if you're going to state something as a fact, it is your responsibility to prove it as such, not mine.
Yeah, you see what Crypto Steve was saying? This is totally true. It's like, dude, like if you make a claim and then you say disprove my claim, Like you have to present some evidence to support your claim. We are not responsible for going out and finding evidence to disprove your claim. That's like, dude, that's not how this works.
I like sauces. Sauces. I like sauces.
Source.
Compute introduces these hardware-level security assumptions to the network. If an architectural flaw emerges within Intel SGX or Google Cloud chips, off-chain attestations or the private keys for protocol-managed wallets could be compromised. Governance centralization also remains a factor. While token holders can veto FIRE mandates, doing so requires a 50% participation threshold of the entire inflatable supply, leaving heavy operational control with the Flare Foundation. These systemic risks must be distinguished from external noise. For example, the 2024 South Korean phishing scheme that defrauded investors involved third-party brand impersonation, completely divorced from actual protocol integrity. Ultimately, Flare operates in a fierce competitive landscape. To sustain its tokenomics, the network must aggressively capture non-EVM liquidity faster than established interoperability incumbents like Chainlink CCIP and Layer 0.
Yeah, good luck, Flare. If this is who they're competing against here for transaction volume, I think that maybe, hey, Moneymaker, this might be something you would want to buy, man. You can buy some Flare. I love what you're saying, dude. Just because I can't prove it doesn't mean it's not real. It's like, oh my god,
dude, that's exactly what it means. But
exactly.
Well, and Moneymaker, you keep saying XRP scan. I literally just showed an article from Binance that said that XRP scan itself disproved your claim. I mean, I don't know what else to tell you. It says XRP scan shuts down Elon Musk XRP ownership claims. Not every account or wallet address that bears the name of a particular person, especially public figures like Elon Musk, actually belongs to said person. This is from XRP scan, your source.
I love what he's saying here. He's saying just because you provided a source doesn't mean your source is good source. It's like, dude.
Well, and that's true. I mean, you can provide a source.
Look, yeah, bro, but like at the same time, like at least we're trying. Okay,
well,
like
and we use primary sources. So like,
I haven't seen a single link from him. Nothing.
No.
All he said is disprove my claim without any. Here's no evidence. Disprove my claim. It's like, but that's what XRP people do, man.
Yeah. Unfortunately,
by mathematically binding external data utility to internal supply deflation through FIRE and FIP16, Flare has built a protocol where the demand for cross-chain connectivity directly dictates the scarcity of the underlying asset.
Okay, so basically, Flare protocol is on its way out. I mean, there's no reason to use this thing for anything. Let's hop on over here to DeFi Llama just real quick, and let's take a look at Flare. It's one of the most recent ones that I was looking at just the other day. And interesting how the chart looks of TVL looks kind of like the price of XRP. That's kind of interesting. Let's go ahead and take a look at some of the protocols. It looks like, this is actually EVM compatible. So that means that I think that there are Morpho vaults here. $37 million on Morpho, that's not nothing. But look at the 1 month change, down 25%.
Well,
that's
to be fair, though, I mean, there's a lot of DeFi that's down like that. I mean, there's a lot of DeFi protocols, and there's been a huge exodus out of DeFi after Aave, that exploit and all the other exploits there's been, and
but Mike, Morpho itself is seeing inflows.
Oh yeah. No, there's exceptions, but I mean, the majority.
Well, but don't you want to be in the stuff that's high quality and not in this? Yeah.
No. And more, but there's problems with Morpho. I have a large bag of Morpho, but like in our deep dive, there is serious issues. It's very similar to a lot of the projects that we've covered, where there's serious issues with the tokenomics. I mean, really, Morpho, the token, is not used by the protocol for the most part. There really is no value capture for the token. And even on their protocol, there's no place to really earn with it. I mean, I hate to say it because I love Morpho, the platform. I love the architecture because it mitigates a lot of the risk that people had with Aave, with that pooled liquidity, having the separated vaults to where it isolates the liquidity to where if one is exploited somehow, it doesn't contaminate the rest. So there's a lot of great things about Morpho, but there's some serious issues with the token.
Yeah, and when I'm taking a look at some of these Flare native DeFi plays, basically it's Firelight, which is like a liquid staking protocol, and then it's Spark Dex, which I couldn't make heads or tails of when we took a look at it the other day. And then it's Scepter Liquid, which is another liquid staking protocol. And then it's that's it. Then it's Flamex, which has no TVL. So there's basically 3 native protocols on this Flare chain. And I mean, look, I don't want to allocate capital to something that isn't already with significant liquidity and with protocols where I can actually do DeFi. And that's just not Flare.
Well, and if you guys want to, I mean, if you're new to the channel, we have a lot of new people watching today. If you're new to the channel, go to the node.pro and for free, we give it away. There's the educational material. So you can go to the Learn tab. And if you want to understand what David's talking about, with why he wants to see deep liquidity in a liquidity pool or on a protocol or, something like that before investing in it, it will explain why. Because if there isn't deep liquidity, then it can potentially, you can lose money simply by depositing your liquidity and trying to extract it. If the liquidity is not deep enough, I mean, you can deposit $100,000, and when you try to pull it out due to slippage, you could lose 20 grand, or more. So,
or you could lose all of it.
Yeah.
Yeah.
So, I mean, if you want to learn about DeFi and, how to really do DeFi and, and the very real risks there are, because we're very bullish on DeFi. It might not sound like it. We're very bullish on crypto. We're just very realistic. And we like to invest here off of facts, data, and what we call our trifecta. So, you know what? Let me pull that up.
Bring that up. Yeah.
So
the trifecta.
This is what we call our trifecta. Let me share my screen.
There we go. If you want to bring that up, I'm going to stop my screen share there.
So this is what we call our trifecta. And we're not saying that this is perfect, but we are seeing, we've been putting this out for about 5 months now, 4 or 5 months now. And we're starting to see institutions and not that to say that they got it from us, but we're starting to see institutions say these same things. We're starting to see a lot of other crypto content creators starting to say the same thing. And the reason being is this is how a traditional business is the valuation is decided, is adoption or customers. do people want your product or service? If nobody wants your product or service, if you don't have customers coming into your store, if you don't have customers ordering your products online, if you don't have customers, that's, number one thing that you need to be a successful business. And if people aren't actually paying money for those products and services, fees and revenue being generated, then you're not going to be in business very long. You're not going to be able to pay the rent or the lease. You're not going to be able to pay for insurance, keep the lights on, employees, all of those things. And a lot of these crypto projects, they just created a token that they can sell to basically pay for operations.
What's so funny here, Mike? Every time we bring up the trifecta, basically the only people who have a problem with it are like the XRP people or like the Kita people or the Cardano people, because when you use the trifecta to evaluate those projects, it's like, I don't know, man, it doesn't look too hot.
Yeah. So basically you need adoption. After adoption, people need to pay for your fees or services. Imagine that, you have a business, people need to actually buy something. And then it doesn't mean anything. I mean, that's great. Like if you have the first two, and that's, with Ripple, I'm just using them as an example. They have some adoption, not a ton, and they generate revenue that goes to Ripple, but the XRP token lacks value capture. There is nothing in the mechanics that allows a good portion of that fees or revenue to flow back to the token holder. So basically you hold a meme that Ripple, and this is Brad Garlinghouse's own words during interviews, they sell XRP out of escrow each month whenever necessary to pay for operations, to pay for their offices in San Francisco and New York, to pay for the lawsuit, the hundreds of millions for that they had to pay out to fight the SEC. If they need to pay, if
you see what Crypto Steve I just said? Polkadot holders can't even spell trifecta. It's hilarious.
Yeah. So, but this is how we look at these projects, and and could we be wrong? It doesn't mean you're not going to make money on projects that don't meet the trifecta. There's plenty of speculative pumps that you're going to see. There's plenty of ways that you can make money trading volatility and hype and things like that. We're not saying you can't make money on these highly speculative projects that don't meet the trifecta. What we're saying is how we are investing is based off of this, because this is how traditionally businesses are evaluated. I've sat in boardrooms with VCs and other companies, where they and investors. If you watch Shark Tank, these are the questions that they ask. This is what smart business people want to know. If you've watched Shark Tank, after they give their little spiel, after they give their pitch, Mark and all of them are sitting there. These are the questions they ask. What was your sales? What was your customers? How many units did you sell last year? What are you charging? And the whole time they're scribbling on their notebook. They're figuring out, okay, they sold this many units. This is what they charge for each unit. Okay, what was your operating costs? What did it cost to make each one of your units? And they're just doing the simple math. And so if the person is asking $500,000 for 20% of their company, and the company's only worth $100,000, then basically the investors are going to be like, no. So this is what we are teaching here, is how to invest like a smart investor. That's all we're doing here.
Yeah, I agree. And, I love the XRP people, man. They are so committed, kind of like communists a little bit. Very committed to their cause.
Yeah. Easy peasy.
Horrible.
Easy peasy. When I set up the studio for tonight's show for Crypto Trenches, I'll be sending you the link for that. So I still plan on having you on tonight, brother. And XRPeasy, he loves XRP, and we're not here to bash on any project. We are simply here to present facts. What you do with it's up to you.
So again, who are the actual users of the XRP ledger? Like seriously, like who uses that for anything?
They're using it for tokenization of some stuff because there is 4 billion in RWAs, 1 billion of which is the RLUSD. So that leaves 3 billion. So, I mean, there is value on it, but you have to ask yourself, even if there was 100 billion or a trillion, how does
Where's
that
the value
translate?
capture?
How does that, exactly what David just said, how does that translate to you, the XRP token holder? Because if it is 0.00001 per transaction, that's the burn rate at max TPS. It would take, I did the math, it would take over 7,000 years, literally, to just burn 10% of the token supply.
I love what Easy XRPZ said. It was a joke, bro. You're very committed, though. Very committed to your wrong-headed ideas. Yeah. And so we'll be able to talk about that later.
A lot of what we say here is just, we want to have fun.
Exactly.
And it's not fun at your expense. People take jabs at us. We're going to jab back.
Yeah,
that's what guys do.
Good.
That's what guys do.
Mike, what else we got going on here, man?
Well, you have the other deep dive.
Oh, yeah. Let's take a look at that other deep dive. All right. Let me go ahead and bring this up with some audio. There we go. Is that the right one? Nope. It is not the right one. I'm going to go ahead and stop that screen share. Let's make sure that we share the correct screen. There it is. Awesome.
And if you could, while David's bringing this up, if you find this entertaining, if you want to share this with other people, if you want to subscribe, if you like the content, please, hit the like button, share it out, hit the subscribe. We're here to put out as good, solid information as we can find without the hype, without the FUD. We're not going to we don't get paid in any way to talk good or bad about any projects. The only money that we make is off of YouTube, engagement, and off of the couple of things that we charge for, like David's one-on-one coaching. That's the only way that we make money here.
So you see what Easy XRP said, man. He says that Bitcoin is a pre-planned psyop, and they're going to liquidate it to power XRP. Oh my goodness, that is just so hilarious.
I want to hear his thesis for that tonight.
Oh my God. Let's learn about Nexo.
Look at centralized digital asset lending in 2026, and one name dominates the volume charts right behind Tether: Nexo. It operates a vast credit and yield infrastructure, managing institutional and retail accounts across more than 200 jurisdictions. But maintaining this operational scale through shifting market cycles and intense regulatory scrutiny required a massive structural pivot. To survive, the platform had to abandon its original operating model, which relied on a traditional profit-sharing dividend. We are going to deconstruct the current architecture of the Nexo token economy to see exactly how it captures value today without triggering strict security classifications. We will examine 3 specific engineering choices: a dynamic loyalty tier system that artificially engineers demand, a buyback and make protocol used to throttle supply, and the mathematical danger of a tier liquidation cascade. What emerges is a centralized financial giant whose stability relies entirely on the delicate mathematics of this closed-loop token economy. When Nexo launched in 2018, its primary value capture mechanism was straightforward. The platform promised to distribute 30% of its net corporate profits directly to token holders. Over 3 years, Nexo completed 4 payouts, ending with a $20.4 million distribution in June 2021. The model had a fatal flaw. Tying payouts to annual snapshots created extreme price volatility leading up to distribution dates, followed by massive sell-offs. To stop this predictable boom and bust cycle, Nexo initiated a governance vote on June 8, 2021. With 362 million tokens participating, an overwhelming 89.5% majority voted to eliminate the dividend. In its place, Nexo implemented a continuous daily interest program. Token holders would now earn yield directly on their balances every day, rather than waiting for annual profit shares. This vote stripped the asset of its original pseudo-equity status. It became a pure utility token, requiring an entirely new set of internal mechanics to drive demand. The core of that new utility framework is an automated loyalty tier system. At the highest level, the Platinum tier, users unlock borrowing rates as low as 1.9% APR, while simultaneously earning up to 15% APY on their deposits. Tiers are calculated dynamically based on Nexo's US dollar value relative to the portfolio. To hit Platinum, Nexo must hold 10%. If non-Nexo collateral appreciates, the portfolio grows, shrinking the Nexo percentage below the threshold. Platinum status is lost, and borrowing rates instantly spike. To restore their preferred tier and lower their borrowing costs, the user faces a forced choice: sell off their appreciated collateral or buy more Nexo tokens on the open market. This percentage-based requirement structurally engineers continuous token demand during crypto market upswings. By tying heavily discounted borrowing costs to a sliding scale, Nexo forces active borrowers to constantly absorb circulating token supply just to maintain their leverage. This dynamic leads to a severe supply-side challenge: how a platform can sustainably pay up to 15% APY in daily yield without causing hyperinflation. The token has a strict hard cap of 1 billion tokens. Roughly 64.6% of that supply is already in circulation. Most protocols manage inflation with a deflationary buyback and burn model, permanently destroying repurchased tokens to shrink the maximum capacity. Nexo operates a different supply management system, termed the buyback and make protocol. Nexo uses treasury funds to purchase spot market tokens, moving them into a secure investor protection reserve lockbox. These tokens face a mandatory 12-month vesting lockup, with zero yield. Once expired, tokens are re-injected into the economy to fund daily yields or DEX liquidity. This creates an illusion of supply reduction, but the mechanism only temporarily throttles supply velocity. The net token supply only shrinks if the volume of corporate open market repurchases outpaces the platform's total daily yield emissions. The buyback and make loop acts as an economic shock absorber, delaying inflation by a full year. However, it relies on continuous new capital entering the platform to eventually absorb those recirculated tokens. When broad market conditions turn bearish, the meticulous engineering of this closed-loop system exposes distinct vulnerabilities. The foundational issue is centralized counterparty risk. User assets are pooled off-chain and lent to institutional borrowers, and Nexo does not provide real-time, on-chain, zero-knowledge proof of reserves to verify the health of these loans. This opacity compounds the primary reflexive vulnerability tied to the tokenomics.
Dude, that's horrible. That's horrible.
Your liquidation cascade. Consider the inverse of the bull market scenario. If the spot price of the Nexo token crashes rapidly, the token's fiat value drops. As shown on this gauge, the user's portfolio instantly falls below the 10% platinum threshold. The algorithmic penalty is immediate. The user is automatically demoted to a lower loyalty tier. The financial consequence of this demotion is severe. Interest rates on active loans instantly spike from 1.9% back to a base rate of roughly 13.9%. This sudden debt acceleration forces the user into a precarious position, drastically increasing the immediate risk of forced collateral liquidations. The threat is compounded by the supply emissions. If platform growth stalls during this crash, the steady unlocking of 12-month reserve tokens dumps additional supply onto an already weakened market. The dynamic tier system that engineers massive demand in a bull market becomes a dangerous reflexive trap in a bear market, actively accelerating user liquidations precisely when they are most vulnerable. Taking a macroscopic view of Nexo's 2026 operational architecture reveals how the platform handles these internal pressures. Nexo has successfully navigated global regulatory crackdowns by securing robust partnerships, aligning with BACT in the United States and MiCA-authorized entities like Tangany in the European Economic Area. These partnerships successfully legitimize the execution layers, providing regulated digital asset custody and compliant fiat off-ramps for institutional clients. Yet, a regulatory authorization does not neutralize the underlying physics of a closed-loop token economy. For the token to remain stable, corporate treasury repurchases must perpetually offset the recirculation of vested yield tokens. The platform must continuously expand its balance sheet to outrun off-chain lending risks and absorb potential tier liquidation cascades. Nexo has successfully transformed a regulatory liability into a highly optimized, self-sustaining utility engine. But it is an engine that ultimately demands relentless, perpetual user growth to keep its economic flywheel from reversing.
That is terrifying. So I would never keep assets on a centralized exchange ever. And just because these guys have been around since 2018, Nexo is who I'm referring to, does not make them safe or trustworthy. This is not a public company. They don't report. This is an entity out of the Cayman Islands and Switzerland. So I would never use this. Yeah, man. Like, look, like, why use a centralized entity? You know, it's just, how many times have we seen these things blow up? You know, it's just over and over and over again. That's all they seem to do is blow up. So, and they don't publish, it looks like they don't publish like those proof of reserves. So, yeah, dude, it's just like, I couldn't touch this with a 10-foot pole. Neither could I touch Flare. You know, Flare is just like, to me, like, the reason why I wouldn't touch Flare is because there are many better options out there. Like, I don't want to go with the low quality blockchain when I can go with the high quality blockchain. So yeah, I'm going to pass on Flare. Again, with XRP, like, I'm going to pass on XRP because there are much better alternatives out there. And that's just the case for the vast majority of crypto. And, you know, for anyone who wants to learn about this stuff, dude, hop on over here to the node.pro, jump into the learn section. It's our Leering Center. You know, all the guys in the chat.
100% free. You don't need to put in a credit card. You don't. We give this away.
Mike, the only thing that's paid is the Canton network information, because I wanted to make that paid, but everything else is free. If you want to learn about Bitcoin, like, dude, you can learn how to build on the Lightning Network. You can build using Nostr. You can build a Zapson payment feature into your website. You can learn Bitcoin basics. This is all really detailed information. Like, if I take a look at some of this stuff here, like, okay, maybe you want to learn Bitcoin versus the dollar. Like, dude, this is incredibly valuable information. I give all this stuff away for free, man. And if you want to take some quizzes, I think that, you know, maybe some of the XRP people would benefit from learning about Bitcoin. You know, maybe go to the Leering Center, leer you a little bit of Bitcoin. Now, if you want to learn about, you know, DeFi, which is something that you can't do on XRP, there isn't any real DeFi on XRP Ledger. Like, give me a break. It doesn't exist. There is DeFi, legit DeFi on a lot of other chains, though. If you want to learn about that stuff, probably the best place to start is to learn about money markets. I think that would be the best place to start. So hop on in here to DeFi University. This is the DeFi University course. And dude, you can play video content overviews. You can listen to podcasts for every lesson. You can scroll down, and I know the XRP people don't like reading. I know that that's hard for many of them, but I'm just joking. But what you can do is you can look at some pretty images. Look, there are pictures.
And there's colors. Yeah, I was in the Marine Corps, so I like crayons.
You like crayons? You don't eat the crayons, Mike?
Yeah. Oh, yeah. Red's my favorite flavor.
You like, and you can take quizzes here, man. So, like, look, all of this stuff, and he calls it AI slop. Oh my God, that's what happens when you don't want to bother to do anything.
Well, dude,
it's like, dude, this is brilliant content, and I turn these into books too. This is probably the best educational material for crypto and DeFi in the English language.
Out of the thousands of people that we've engaged with in the chat and me on X, I have repeatedly told people that use that argument that, you know, it's AI. I'm like, then find, if it's slop, find anything that's incorrect. Tell us and cite a source.
This stuff is brilliant.
That we're wrong, but they never do.
Because they can't.
Never do.
They can't. And look, it's a shame for them because, dude, like, this stuff is free. Like, you want to learn about crypto and DeFi? Why don't you just go through the free stuff right here, man? Like,
we're not calling your XRP baby ugly in any of this. This is just simply teaching you how to use hot and cold wallets. This is teaching you what DeFi is. This is just education. it's, I mean, the deep dives, yeah, they're about the different protocols, and you might not like what we say about them. That's up to you. I mean, again, we're not trying to get you to buy or not buy anything, but
I don't care what you buy, dude.
I would have killed for this when I got into crypto.
Right?
Dude, I made so many mistakes sending my tokens to the wrong address. Whenever I was trying to bridge assets or anything like that. When I got into DeFi and I didn't understand impermanent loss, and I was thinking I was making a bunch of money because of the APR, and I thought that I was making $100 a day and all this, but because of impermanent loss and divergence loss, I was losing more than I was making. But I didn't understand that because there wasn't information like this.
Oh, and I publish this stuff as books too. So if you want something physical that you can hold in your hands, the books are like $10 on Amazon. So like, you can do that too. It's just like, how badly do you want it? Like, do you want to actually build a skill set for yourself? Or do you want to just consume random pieces of content on YouTube and X that just that just makes you feel good or reinforce whatever you believe already? So, yeah. And I mean, dude, it's like, it's so frustrating because Moneymaker, love you in the chat, man, that you're super engaged. I think that you would get a lot of value out of going through the educational content. Like, you really would, man. This is good stuff. And it's free, dude. Like, it's up to you. Like, do you want to build a skill set or not? If you do, hop into the Leering Center, okay? And jump into the free stuff, man. It's all right here.
And hey, really quick, we have like 130 people watching over on X. If you want to join the conversation, pop on over to YouTube, at the Node Network, all one word. I mean, that's where you can jump in the chat and you can, join the conversation, ask questions. We love people asking questions. It's why we're interacting with Moneymaker, because a lot of the stuff that he's saying is stuff that I hear from a lot of other, XRP, holders. And it's because like I said, I was one of them. I had over 40,000 XRP. I was listening to, all the usual suspects. I listened to Mickle. I listened to Good Morning Crypto. I listened to Zach Rector. I listened to Jake Claver. I listened to all the XRP people for years. For like 5 years, I listened to them every morning. And before I was doing a show, I was, drinking my morning coffee, and I was watching those shows, and I believed all of it. And it got to a point over time where, they would say, when the court case was over, we were going to the moon. When we got clarity, we were going to the moon. When we, whenever, this happened, we were going to the moon. And then when that happens, we're going to the moon. And it never happened. And so I started doing my own research, and that's what led to me starting a show, and what led to me selling, my XRP and a lot of other. I had XLM, HBAR, XRP, Quant. I had all the usual suspects, and
it's all garbage.
No, I mean, it's not all garbage. They all have different aspects.
It's like you got a piece of garbage that smells one way, and then you got other garbage that smells another way. I got to talk a little bit ish.
Well, the thing is that they all have different tokenomics. Like Ondo. Ondo is a governance token. There really is no utility to the token other than governance. It's not really used for gas. It's not used. There is no burn mechanism. There's no value capture whatsoever. But it's a governance token, and Ondo Finance, the company, owns most of the tokens. So whatever they want to do, they can vote on it, and do whatever they want. So you just need to understand what you hold. And that's what we're trying to do here, is just, help people understand what they hold. We're not saying that, it's all inclusive. You're going to have to do your own research. If you want to invest, you're going to have to you're going to have to take some time. You're going to have to do some work. You can blindly invest and, maybe it will work out for you. But odds are, if you want to mitigate your risk, you're going to have to do some of your own research. Our deep dives give you the Cliff's Notes. It gives you the 30,000 foot view of, this is the project. This is the use case that they're going for. This is what the token is. This is what the token does. This is what it means for you, the token holder. And then if it looks something that you want to dive deeper into, you can. If it looks like trash to you and you don't want to dive any deeper, that's fine too. We're not here to tell you what to invest in or what not to invest in. We are simply here to educate.
I would love to see everyone succeed, man. All you guys in the chat, I want you to win. And I want to win right alongside you. And that's why I think that education is just so important, because you got to understand these things. Otherwise, I think that it's very, very easy to be misled.
Yeah.
So that's why we give this stuff away for free, man. Like all the educational content, it's free. Give it away. So how bad do you want
it? And Lord, we've done a deep dive on Bitcoin and Ethereum. And to be honest, other than the fact of adoption, and that has given value to BTC. As far as our trifecta, it scored terrible.
Yeah.
So, like I said, I mean, it's not a perfect science. There is room for speculation. You can make money off of speculation, but
sure.
What we're saying is that the way that we're choosing to invest, we're looking for the Googles, the Microsofts of crypto, because we're very early. There's over 54 million different crypto tokens and coins out there. They're not all going to survive. It's going to be like the .coms. We are simply here to try to weed through all the chaff to get to the wheat. And hopefully, out of the 10 or 20 that I choose to invest in, I'm hoping that one or two are going to be the ones that end up being a Google or a Microsoft or an Apple. Could I be wrong? Absolutely. There's nobody with a crystal ball. So
legitimately want you guys to succeed though. So, keep coming back, man. Let's keep learning about this stuff together. Appreciate all of you. Like, share, subscribe if you got something out of this.
Absolutely. And join us tonight. We're going to have easy peasy XRPeasy.
It's going to be great.
he's going to share some of his conspiracy theories and maybe he'll prove us wrong about XRP. So
sure.
Join us tonight for Crypto Trenches. That's going to be 5 p.m. Pacific and 8 p.m. Eastern. So till then, David, thank you as always. Thank you to everybody in the chat. Again, if you're watching on X, pop on over to YouTube and follow us there. Join the chat. And until next time, Veteran Crypto out.
Peace.